Holdings. Thanks for waiting by patiently, Sridhar.
No issues at all.
I wanted your thoughts on how to approach the RBI policy today, because the expectation is that there will be a rate hike. Some are even talking about a 50 basis points hike. Do you think if that comes through, the market will actually take it positively, taking into consideration that the RBI is now serious about sort of, solving a lot of the issues?
Yeah, so I think up to 25 basis points is broadly priced in. If I were to look at the mandate of RBI now, it is to manage inflation within the band. And if I look at the inflation numbers as we have for the last month, it's well inside the 4% range. And I think the previous month, which the numbers will come now, because of the base effect, it may be closer to 5. But I think for the year after that, it will be broadly in the range. Keep in mind that, food prices in general have been very benign. And from whatever I understand from speaking to people who are in the industry, especially in the agri industry, they are saying that we are going to have a bumper crop this year, not only on food, even on vegetables. So I don't expect food prices to go up. There will be second derivative impact of the crude prices. But I think the inflation, in my view, will broadly be within the RBI range. So I don't see any reason for RBI to, hike 50 basis points. And hiking for the purpose of currency in most other countries hasn't worked. So I would say 25 is sort of priced in. I won't be surprised if they don't do anything, but I may be not in the consensus view right now, where I say that it could be a pause also. Okay. So that's my broad view.
Okay, so expectation of a 25 basis, I think, yeah, there were even bond market guys who said that if it's 25 basis, yields may actually fall a bit because that's priced in.
Correct.
But Sridhar, the other part of the bond market is the corporate bond market.
Correct.
How worried are you about the dislocation there, your view on NBFCs therefore?
Yeah, so I haven't been a big fan of NBFC and particularly HFCs, where I've had concerns on their asset side. Now, this is a completely different ball game, which is on the liability side. And irrespective of what the CEOs may come and tell you on your channel, they've stopped lending completely because currently they are in the cash conservation mode. And keep in mind that one of the CEOs of AMC was on your channel to say that almost 6 lakh crores of lending has happened, or bonds have been issued by the mutual funds out of the 15 odd lakh crores of debt fund. That's a significantly large number. And they're seeing significant liquid fund outflows. Corporates are basically panicking and they are redeeming. So what will happen is that funding from the mutual fund industry to this segment is going to significantly shrink. And I don't think banks are going to open the tap. So what will happen basically is that NBFCs, especially the large ones, will be able to get money. The smaller ones will struggle and they'll have to cut down on their growth. So that's the broad framework that I see that's going to happen over the next 6 to 12 months. Okay. So even though the stocks have fallen a lot, I'm not a bottom fisher in this segment. Yeah. What will happen is that high CASA banks are going to significantly benefit because this is return of demand, where they are seeing flush of money. Corporates are redeeming debt funds and they're just keeping it in deposits. And they are not getting good rates, but they're happy even 100 basis points lower because they don't want to lose capital. Exactly. So this is going to be great news for banks. So if you ask me, within the financial services space, I would double up on my bank exposure. I wasn't a big fan of NBFC, HFC. I continue to be the same.
Yeah, in fact, I must say, when at the height of the bull market on housing finance stocks, Sridhar had warned us that this is a space which is perhaps in a bit of a bubble. I still remember that housing finance in particular.
But that asset side is still worrying. I mean, we still haven't seen enough on the asset side, especially on the HFCs. The HFCs restructure assets, and my point is that RBI has a very strict guidelines on restructuring and disclosures, whereas HFCs don't disclose that to us. And I was in discussion with the NHB chairman, who is now resigned, and wanted them to actually implement similar guidelines for HFCs like it is for the banks. However, from what I understand, there was huge pushback from HFCs and they couldn't push that regulation. I hope RBI takes over during this crisis time and some sort of reform is required.
The mandate will allow, because
you need some reforms there, because disclosure norms, as we've seen, is great for long term. So there is no reason why HFCs should not disclose what they are restructuring. I don't see any reason why this should be hidden to investors.
Okay, just one more question, and we've discussed enough sectors. this whole bravado about domestic money, you've seen if the force of FI selling is so much, you just can't match it, Sridhar, can you?
So in general, flows can never take the markets up. I mean, it's good to say that you're getting 6,000, 7,000 crores and markets will not fall. We've seen in the past also, what will take the markets up is earnings or other related macro issues. And I think, in my view, earnings are starting to improve. We saw good earnings for the last quarter. We need to see how it flows through. But in general, I would say if earnings are good, macro starts to improve, markets will go up, irrespective of what the flows are.
Just one more pocket I wanted to discuss with you, the auto space, because we are seeing a lot of these auto stocks now report slower growth than what they did earlier. You think it's just a blip, or is there a structural change in the growth story?
So I would say that currently there is a slowdown, but in pockets we are seeing growth. So some of the companies are showing growth, but at the cost of maybe they will take a hit on the margin. You're seeing good growth in CVs in general. So I think it's mixed. It's very difficult to currently pinpoint whether autos will go up or is there a structural slowdown. I would still bet on autos right now because I think that structurally they have still growth potential available and valuations are correcting. So earlier we had very high valuations, so the margin of safety was very less. I think that is improving significantly right now.
What's your view on earnings growth itself? There are negatives because of crude and interest rates, but there is a positive because of rupee depreciation, and that normally shows up a year later. Will there be earnings downgrades or upgrades?
So it's Lata, it's very tough to because the multiple forces playing right now. If I go with what I saw last quarter and the commentary that I saw having met many of these companies, it looked as if we are seeing serious green shoots. Now, last 1 month's events could have significant impact on consumption in general. So I think I would wait for what is for one more quarter to gauge on how things are. But broadly, in general, I am in the buy on dips on the domestic companies. So it could be consumption related, as I mentioned already, banks, construction companies, because they have huge orders.
Not the global related. I mean, not IT pharma.
Not IT pharma, because
rupee should help. No?
Rupee has never helped IT. I mean, you go back in history and see 10 years back, rupee was 45, TCS had higher margins. Today, last quarter,
no, it's only a tailwind, but
so it never helps.
Their destination country is doing well.
It is the business that helps.
So yeah, but the destination economy is doing well, won't help?
Well, destination economy has been doing well for 3 years. They're reporting single digit. So I think there is a disruption that is happening in the IT sector, which is they talk about what they call as digital, but the digital number is very camouflaged. I don't think they have innovated or disrupted themselves enough to actually take care of the growth for the next 5 years. So I think that is a space where I'll be very careful because first of all, I've been wrong. These stocks have done very well. I was bearish on IT. These stocks have done well, but I'm not changing my view just because currency has moved.
Okay, so final question then, the $1 million question, right? Is this a bear market or is it still a bull market correction?
Well, I'm not an expert on whether it's a bull or bear market, but I think the opportunity right now is looking very interesting. I'm seeing many companies with good cash flows, good earnings potential. And prices have corrected significantly. Is this the bottom of the market? I don't know. But if I stagger my purchases over maybe the next 1 month or so, maybe 2 months or so, I think there's a potential to make returns over the next 1.5 years, despite all the election uncertainties. Because I'm reminded of 2013. I know people told me exactly the same, that there's so much uncertainty. And if you ignore the election, noise, there's money to be made.
Okay.
All right, Sridhar, thanks a lot for joining us today and answering all the questions. By the way,